Welcome to the video newsletter for clients of Index Gurus Wealth Management. Hello, this is Farouk Jaffer, Certified Financial Planner Professional and Head of Index Gurus Wealth Management. 2022 started with rising interest rates, high inflation, and unthinkable violence. Uncertainty is high, investing is more complicated, so we believe active stock selection is more important. As a result, I will discuss our domestic and global outlook, upcoming trends, and how we are positioning portfolios for success. Stocks have had two back-to-back downturns this year, followed by a relief rally. Leadership has flip-flopped, as has investor sentiment. Fed tightening and the war in Ukraine have been the dominant macro forces. The correction earlier this year was largely about higher inflation and rate hikes, and this will continue our current volatility. Volatility isn't fun for investors. Investor sentiment has slumped, so it's no wonder that we're hearing more questions about whether it's time to get out of the market or at least hold on to excess cash until the storm passes. The short answer, it's not. In fact, for most long-term investors, it's actually the time to stay or get invested. The next time market volatility feels scary enough to make you second-guess your long-term investment strategy, have a good think before you get out of the market. There could be a 70% chance you'll miss one of the best days. The chart below illustrates what has happened when an investor missed the 10 single best days in markets over the past 20 years. Inflation and growth will likely play out very differently across regions. In the United States, prices for everything from electricity, cereal, to airline tickets rose 8.5% last month from a year ago, according to the Consumer Price Index for March. Gasoline, shelter, and food prices were the largest contributors to the overall rise in CPI. The U.S. economy appears relatively isolated from the direct effects of the war in Ukraine, given minimal direct trade links with the region and its relative energy independence. However, slower growth elsewhere in the world, higher prices due to global supply chain disruptions, and rising rates are still likely to dampen growth and maintain volatility. With that being said, we see many good companies that will weather this storm. The U.S. Federal Reserve at its March meeting started a new tightening cycle by increasing rates and signaling a series of rate hikes throughout this year. As a result, Index Gurus is bullish on equities and cautious with fixed income, specifically medium to long-term duration bonds. Europe will likely be most affected given its geographical proximity to the conflict, its closer trade, supply chain, and financial linkages with Russia and Ukraine. It has greater dependence on gas and oil imports from Russia and will also have to manage the arrival of war refugees. As a result, we are bearish on Europe and many international countries in the short term. Megatrends are powerful, transformative forces that can change the trajectory of the global economy by shifting the priorities of societies, driving innovation, and redefining business models. They can have a meaningful impact on spending behavior, government policies, and corporate strategies. Identifying the potential for structural change and transformations early can be a key driver of successful investing. Technology breakthroughs like artificial intelligence, machine learning, and automation are unleashing a wave of disruptive threats across industries. Did you know that more than 75 billion internet-connected devices are expected by 2025? And that is up from 30 billion today. Climate change will cause us to have a greater dependency on clean energy like solar. Did you know that half of the world's energy is predicted to come from solar and wind by 2050? Certain commodities such as copper and lithium will likely see increased demand from the drive to net zero, and we are overweight the tech center and believe that it's well positioned for this green transition. Another major trend are longer lifespans and a larger demographic of retirees in their 60s. Did you know some estimates project a 45% increase worldwide in people aged 60 or older by 2030? With new technology comes the responsibility of privacy and cybersecurity. The Colonial Pipeline story is the perfect example. Did you know corporate spending on cybersecurity to counter online threats is rising quickly, up 12% from last year? We believe factors such as strong free cash flow, low volatility, and rising earnings will ultimately lead throughout this period of heightened volatility. Index Gurus favors U.S. stock holdings over European and other developed markets because we see the impact of the energy and food shocks as greatest there. Right now, we are seeing more opportunity to add to stocks that have been unduly punished in this downturn. What if we enter a recession? It is possible that this may occur, but keep in mind that the average recession lasts 13.3 months, while the average expansion lasts 60.3 months. Given our societal changes, it makes sense to tilt a diversified portfolio in various sectors. Why not just put it all in an IT or a QQQ? You'll notice that IT, the orange color, has held the top spots only in the past 4 years. Other top sectors include consumer discretionary in red and communication services light blue. This will change over time, so holding top companies in various sectors is important. It is so important to practice diversification, even though it sometimes feels painful and comes with FOMO, fear of missing out. Morningstar did a study comparing two portfolios over the past 20 years, comparing a growth portfolio to a diversified portfolio with 40% in income securities. As you can see, you would have actually come out ahead with a diversified portfolio. Focus on your goals and not the news. Index Gurus is going to make sure you are well positioned in great companies that will weather the coronavirus pandemic. With proper positioning and guidance, the chances that you will be in the green, in the positive after 1 year are 75% in your favor. The US has shown that they are willing to keep the economy humming, so it makes sense to stay invested. Thank you in advance for your trust. You can count on Index Gurus to help you reach your goals with financial peace of mind.